So today was a really good setup for me. This is Wednesday. All right, so first things first, the news that we had today was only FOMC meeting minutes at 2 p.m. So I don't take FOMC meeting minutes as a serious news event because I only trade the morning session anyway, but meeting minutes doesn't move the market like the actual FOMC release. So I am okay with trading in the morning. But right now we're on the 4-hour chart and I am showing you exactly what I saw this morning when I came to the market. All right. I'm only looking at the last 3 to 4 candles from this morning. Okay. This last candle here is the 6 a.m. candle. But if you look just underneath the 6 a.m. candle, I have a 4-hour buy side imbalance on both markets. And we are looking at S&P futures on the left, NASDAQ futures on the right. Okay, but both markets had this buy side imbalance in the same area. And as you can see, price did test that during the 6 a.m. candle. Okay, so if that is the case, if price tests one of these areas, I am looking to see if the market can support that, right? If this can be a solid level of support to push price higher to external range liquidity, which would be the previous high, okay? So that was my trade idea for the morning is if we tested this, then can we reach external range liquidity? And I'm gonna show you the trade I took to that area. All right, today's trade was on NASDAQ and I'm just going to drop down a couple time frames and show you that. All right, so I'm going to drop down to the 15-minute and this is what I was met with. Okay, so normally I'm looking for a reversal at my London session high or low. Okay, so by looking at the screen you can see that London session high on NASDAQ was taken out during 7 a.m. okay, and there was a nice reversal trade here. We took out the high, there's your liquidity pool, and price dropped lower. I'm sure there's an entry on lower time frames down into that 4-hour imbalance. So from one liquidity pool to the other. The reason why I didn't take that is because I do not trade before 9:30. Vice versa, if you look at S&P on the left here, London session low was taken out at 9 a.m. Again, that's still prior to 9:30, so I did not touch the market. So even though my London low on S&P is taken out, but my London high on NASDAQ is taken out, I'm not touching anything. Because this level was already taken out on NASDAQ, all I did was draw a new line to represent the pre-market high. Same thing on S&P. This was the pre-market low, all right? Because my London session low was already taken out, okay? So what I'm looking for is for 9:30 to happen, and that is right here. So we'll go forward in time to see what happens. Okay, so as you can see at 9:30, there is a liquidity grab on the pre-market low, but over on NASDAQ, you can see this is the first time that price is engaging with that 4-hour buy side imbalance. Okay, so to be clear, we actually tested that 4-hour imbalance on S&P at 9 a.m., but this was the first time we got the test on NASDAQ at 9:30 a.m. okay, pretty much, near the same time. But as I stated in the beginning of the video, I am expecting price to hold as support after testing this buy side imbalance because I want to see price go from internal range liquidity to external range liquidity. All right, so now that that's happened, where am I going to get the entry? So first off, the way I get confirmation for an entry is after a liquidity pool has been grabbed, right, has been raided, I want to see a bearish or bullish engulfing form on the 5-minute time frame. So since I'm looking at the lows being grabbed, I want to look for a bullish engulfing pattern on the 5-minute. So I'm going to drop down to the 5-minute. All right, and if you take a look at the chart on the right, my engulfing pattern came in on this last down close candle. Okay, right there. That's my engulfing candle. And I'll just clean this up a little bit. And as you can see, we did have one over here on S&P as well. I will draw it out. So I have my engulfing pattern. All right. The next thing I'm looking for is an entry variation. That could be in the form of an inversion fair value gap. It can be in the form of a mitigation block. Ideally, I like the inversion fair value gap case. But in this situation, I was a little concerned about not getting the entry based off of how strong S&P was moving in this very moment. Okay, so take a look at S&P. Take a look at the size of the last candle. Do you see how the majority of the body is above the engulfing candle, like this box I have here, do you see how it has this large body above the box? Right? Take a look at NASDAQ. NASDAQ, the body of the candle doesn't engulf like that, right? The body of the candle is still near the engulfing candle block that I have here, okay? So for me, I mitigated a lot of risk by trading NASDAQ. Now, the way I did that is by taking my entry off of this last up close candle right here. All right, let me just make this a 5-minute area. This area right here, okay? So this is like it's similar to the unicorn setup, right? You have a low, high, lower low, and then a shift in market structure. Instead of price pulling back into some type of fair value gap, possibly on the lower time frame, I went ahead and took my entry off of this block right here, this last up close candle before price took out the liquidity here to the left. All right. So by liquidity, I'm referring to this swing low here. And of course, entering into that 4-hour fair value gap. Okay. Once we got this close right here, as you can see, this is a bullish engulfing. This first up close candle was not a bullish engulfing. I need a candle to close above this box. So that happened at 9:40. Upon getting that candle closure, I placed my buy entry right on the high of the candle of 9:15. The very next candle got me in, and I will show you where I placed my stop. Okay, so this stop was massive. I went below the candle of 9:40. That was my stop, below this candle, and I targeted 3R per my plan. I know it's gonna look crazy. Take a look. So 3R took me into this daily imbalance that had not been tested yet on NASDAQ, okay? And I will just, and you can see all this on your chart. Like if you go to the daily chart, you can see this daily imbalance on both NASDAQ and S&P, but the S&P had already tested it in the morning. I encourage you to go back and look at your chart, okay? So here is the entry, all right? We got the bullish engulfing. As soon as that closes, my buy limit is right on the level of this candle from 9:15 a.m. Okay. I didn't even need to go down to the 1 minute to enter here. I just went off of the 5 minute. Take a look at the next candle. Take a look at the drawdown here, okay? My stop loss is below the candle at 9:40, but 9:45 came very close, okay? Take a look at the pullback on S&P. I did not think it was gonna pull back that far. I thought we were just gonna continue marching higher, 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 higher. But I digress. My stop loss was safe. It could have stopped me out. There's nothing I can do about that, right? But if I'm in the trade, I'm in the trade. Fortunately, price allowed me to stay in, and here was the outcome, okay? Now, as price broke the external range liquidity, remember, we hit a 4-hour internal range level, which means the previous high is the external range liquidity level. After taking that out, I wasn't sure if we were going to reverse again, okay? So in the recording that I'm going to put in the end of this video, I felt like I was asking a lot out of price, going this far beyond this previous high without a reversal, right? I put in the video, I know I'm asking a lot. Like, I don't even know if it's going to go all the way up there, but the reason I targeted that is because it's per my plan. No matter what, I have to target 3R, okay? 3 times my risk. So that was my trade from this morning. I hope I wasn't all over the place with the explanation, but here's the recording from my trade from this morning.